Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day all. Ira Epstein of Linn & Associates with your metals market update for this Monday, and we're right now on October 1st, 2018. However, the quotes you're seeing are ready for October 2nd because I'm after 5 p.m. Central Daylight Time. And yeah, it's been a long day for all of us. After last night hearing about the president's deal with Canada, obviously the impacts came in on the market. As you can see, currencies, you're up in the dollar index and up a little bit tonight in some of the currencies. Not a big difference. The gold market tried to break down early on, came back as the risk sentiment switched to risk on in stock indices. And even though they're down a bit tonight, they had a stellar day. With the exception of the Russell 2000, those small caps are still feeling the pressure of higher U.S. interest rates. As you look at a weekly chart of closes in gold, you haven't changed much since this big spike down. We got one rally and we're leaking back. I use that word leaking. We're down $4 for the week so far. When you take a look at this chart, I don't see as a chartist anything friendly on it. I see a pattern of lower highs, lower lows. That's bearish unless prices get up and take out this high. Let's go to it so you get a feel for it. At 1207.90. That would break the pattern of the lower highs, lower lows. You can't go by this just yet because we just opened tonight and we don't know if we're going to take out the 1196 level and just move a bit higher. The resistance in the chart comes in at 1201.60. That's the 18-day average of closes. So I wouldn't be surprised if the pros try to sell into that with stops over that high. Why? Because they've still got the bias down and the swing line down. In terms of a bounce, well, we tried to get under and stay under the lower Bollinger Bands in black. Now, here's one of the things you have to pay attention to. You see all this sideways action. The market started coming down last Wednesday, broke out to the downside on Thursday, but by late in the day on Friday, it was able to get a bounce back up. Will the market get to the 18-day average, the resistance, or just lay on this Bollinger Band is the question. Let's assume the market decides to rally and get up here through that 1207.90. Then we'd say that we had a false breakout to the downside. Until that occurs, I still see that in place. Momentum-wise, you have an oversold market. Anytime the slow stochastic reading has readings under 30, either of the numbers, it's oversold. Now, if both numbers got under 20 and stayed there, I'd give you another word called locked in or embedded. You're not there. You're in an oversold market attempting a downside breakout. You have the same pattern in GLD, the popular gold ETF. Lower highs, lower lows, oversold. At support of the lower Bollinger Band, as you can see. The different pattern here is if this market took out the 113 level, it would then create a pattern of potentially higher lows if it didn't take out the 111.85 and higher highs, putting the 113.35 as the resistance. Right now the bears still control this market. In GDX, we have a pattern with today of lower highs, lower lows. So the swing line is down. Countering it is the fact that the market closed over the 18-day average, so the bias is up and prices are working out of an overbought condition by breaking down. Both numbers are back under 70. In the gold-silver ratio, well, we had a bounce today, a pretty sharp one, but you still would say that this market's turned itself down in favor of the silver. And in silver, I still view the market as having higher lows, higher highs. That's bullish. Supports back at the 1432.20 level. If you take a look at the slow stochastics, they were overbought. You can see this on Friday. They have already worked themselves. Let me take you back to that. Let me take you back to last night, Monday. I said that wrong. And they're already on this break working themselves out of that. Excuse me. In the copper market, we have a market that is trying to get a momentum correction to the downside. You can see how the momentum's starting to point down. We have a pattern of lower highs, lower lows. That's bearish, but as long as prices stay over the 18-day average, the bias stays up. Everything's not together, so we have divergence in that. In the platinum market, this whole correction culminated with a breakdown to the 18-day average of closes, and at that point the market grabbed some support on Friday and popped back up today. It is still overbought. It's got the bias up, but again, you have divergence because the swing line is down. In the palladium market, watch out tonight when you reopen. You got to keep your eye and see if that slow stochastic, the red line, drops under 80. Today's break in this market, in my opinion, was the first sign that the palladium market is now going to let the other metals catch up to it in some manner. It doesn't mean it can't break and they break, but it looks to me like it wants to correct a little bit if it loses that embedded reading. Barring that, it's still good. In the dollar index, obviously the NAFTA New Deal, called the USMCA, I got to get used to that, gave the market a bit of a pop. I see resistance still coming in at the 95.18 level, the upper Bollinger Band in an overbought market with support back at the 18 to 100-day moving average of closes. Want to remind you that we'll be writing about all of this tonight and throughout the day tomorrow for you as well. Really giving you an idea as to what this all means for the different futures markets, because it impacts the dollar, it's obviously going to impact the metal markets, so on and so forth. We cover all these areas, and yes, you can pick and choose the areas you want. If you haven't tried our research, only stay on for a short while unless you have an account with us or you're trading through my research and so on. Well, I'd like to show it to you. And to get it, just give us a call at 866-973-2077. You can also go to our website at www.iraepstein.com or click right up here. It'll take you to it. I'm Ira Epstein. You have a good day.